Hello everyone and welcome to Day Trader S&P 500. Today is May 3rd, 2025. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. As always, we want to get our YouTube subscribers caught up with our newsletter subscribers. So let's start out showing you guys the auto trades right here. Click on here and it'll take you to our landing page on auto trades, if you will. Okay. And I want to show you guys the details of that, which are here below. Okay, there's our systems. We have a micro and a regular E-mini. There's all the ways you can check it out. And I wanted to show you guys here auto trades. There's our latest results. We're number 6. Going to work our way back up to the top here for the last 3 months. How does it work? Developer is me, Dale Woodson. I use triggers and targets with Fibonacci extensions and ratios and Elliott waves, as you know. Money management system, which is critical. We use the Brian Jones fixed ratio money management system. Limits our losses to 5% of our portfolio and builds on our gains. The way it works is you open a futures trading account with Striker. They auto trade my trades in your account, which you open with them. Okay, there's all the contact information if you're interested in opening that up. Okay, there's our disclaimer, which you saw earlier, and it's repeated again there. Okay, without further ado, let's get into some of this analysis. And let's start with the SPX, and we'll go, here it is, monthly. I want to look at the big picture here. Okay, so let's make a full screen out of that. Let's get this down here. Let's see if we can make this even bigger full screen. There we go. Okay, so out of that pandemic low there, out of the expanding triangle, which was, I don't even have it all in there. There it is, the fourth wave. In the purple here, we've got a 1 up in parentheses, a 2 down. This looks like 3 up, which just happened recently, okay? Back in February. You can see this move down. It's a little tight here, so let me just zoom in on this for you guys. Okay, here we go. Let's back that out, make that bigger. Okay, so you can see after that 1, 2, we have a 3 up. We have a 1, 2, 3, 4, 5 in purple, and we have the 5th wave subdividing in red with circles around it. Okay, we've had a significant decline from there. Look at this monthly bar, or candle, for you guys who use candlesticks. That's going to be hard to take out to the downside, okay? But looking at our analysis, wave 1 here, okay, at 48.18, and we got wave 2. So this is wave 3 in this count, which is somewhat bullish because it pretends to have, or portends, not pretends, to have a wave 4 down, followed by a wave 5 up to new all-time highs. Here's our targets for 4. That low so far is a 48.35 and change. And here's 48.18 at the wave 1 high, okay? Whoops, I didn't mean to do that. Let me escape out of here and undo that and go back in. There we go. Okay, so that wave 1 high is 48.18. This wave 4 should stay above the wave 1 high. So far, so good, 48.35. If that's taken out to the downside, it negates this count in purple and brings the one in black into play. So far, it's a long way away from there, and we'll get into the shorter term analysis. Again, this is monthly, and this is a log scale. But as you can see here, if I get back out, yeah, that is the retracement targets right there for that. But in the black, if the purple is eliminated, we've got a 5 and an A down in parentheses, a B up, and a C down in an expanded flat, where wave B goes above the start of wave A, which is there, and C goes below the bottom of A. Okay, so that is a much more bearish, if you will, analysis, the black one. And it's not in play. The purple is our primary wave count, but if we get some sort of low that goes below 48.18, it's going to negate that purple count and bring that much more bearish, if that's such a phrase, analysis into play. So that's the big picture there. We'll know, we'll get down into the smaller wave counts, if you will. Okay, let's just skip over to the ES, and this is the daily of the ES. Okay, there's the all-time high. Let me make that full screen, and let me get that even bigger full screen. There we go. In February, we've got a 1 down in black, a 2 up, and then a 1 of 3 in black, a 2 of 3. Okay, again, where is it wrong? This 2 high here cannot go above this wave 2, 58.37 and a quarter. Okay, so far it's at 58.23. I'm sorry, that's where C equals A. The actual is 57.24 on Friday the 2nd. Okay, went ahead and closed that gap above. Okay, that had been open for quite a while, and here we've got our other open gaps here. Okay, below this one from Wednesday, and this one going back to April 22nd. So if this 2 up is complete here, it could go higher, but not much higher. There's a roof or the ceiling sitting right above it, 58.37. Wave 3 of 3 down, that's 3 of this, of 3 of with the parentheses. Then it's going to take out those gaps, and then there's our targets. This wave 3, here's the targets here, you can see, and here's the larger degree, 1 down here, 2 up there, wave 3 targets there. Okay, so that's what we're looking at on the what is it, the daily of the ES. Okay, let me get into a few other things here. Got a big report to go through, so this will be a little longer than normal. We have a lot of things we want to cover for you guys. Let's get into the Dow if we can. Let's get back over here. Let's get into the Dow. There we go, and we'll take you guys through our monthly report, which has all these and a little more details. But let's make that bigger and make that bigger. Now we can see everything. We'll scrunch that down, see if we can get all of this in. Bear with me while there we go. All right, we're looking at everything from the October 2022 low. In blue, 1 up, 2 down, 3 up, 4 down, 5 up. This key level was broken some time ago. So from here we've got a 1 down in parentheses, a 2 up, and then we've got our targets here, 3 equals 1 in black, 32,943, and we have a 1.618 way down here, 27,726, which would be below the October low, which is huge. These red lines are corrections of this 5-wave advance from the October 2022 low to the all-time high. And you can see right here the 382 is at 38,816, the 500 at 38,887, and so far the low is 36,611. There's further ones down here, further targets down here in red if that 2 holds. And again, where is it wrong? All right, this 2 is wrong if it goes above this all-time high right here, 45,073. We don't have this as subdivision into a series of 1s and 2s like we had on the ES. Excuse me, but here's the lower targets in red, the 618 and the 786. So we'll see how that plays out. Okay, let's get out of the full screen mode, and we're going to go to the NASDAQ. We can get into that. There's the NASDAQ there. Let's get that there. Let's get this into full screen mode and go even further and see if we can scrunch all that in. Okay, similar to the Dow, there's that October of 2022 low. Again, 1, 2, 3, 4, 5 up in blue. Okay, we have a 1 down and a 2 up. There's our Fibonacci retracement targets. I think you can see them there. This one's sitting in between the 50% and the 618. There's the 1 down, there's the 2 up. Or is it wrong? Goes above that all-time high, 20,204. That's back in December. These indexes are a little different. They're diverging, which they always do when you put in a top. Okay, happened in 2000, happened in 07, it's happening now. Or it has happened, should I say. Here's the retracement targets here for this decline. 1, 2, 3. I don't think I did the Fibonacci extension for that, so let me do it now. Put that in there and get that magnet going so we get accuracy. Okay, so that'd be 1 down, down here, 2 up, up here, there, up there. So wave 3 in parentheses gains equality with 1 at 12,628, and the 1.618 is 9,278 and some change. So that's what we're looking at for the Dow. Let me get out of that. Get out of that. Let's go over here and I'm sorry, that was the NASDAQ, wasn't it? Yeah. My apologies. That was the NASDAQ. We did the Dow before then. Let's do the NQ. Okay. Here we go here. Let's put this over here. Get that there. Get that full screen. Get that there. Okay. Open that up. There we go. Okay, I think we got everything pretty much in here. Slide that over. There we go. Okay, the all-time high, we've got a 1 down, a 2 up, 1 of 3, 2 of 3, and again, we're subdividing here. Our extending wave, 1 of 3 of 3, 2 of 3 of 3, okay? There's a direct hit within a point right over here. Back on this low. Okay, where is this wave 2 wrong? When it goes above there. Okay, above, I'm sorry, this 2 goes above there. Again, it's real tied up against there. All right, similar to the ES. Here's our targets here for wave 3, 16,200 and 13,680. I think that's about it. Yeah, that's about it right there. And that is the NQ, which we have a subscription service for that there also on our web page. Let's get into gold if we can. Moving right along, there's our gold. There's this. And this has been, we've been all over gold for so long. Let's see if I can get all this in there. I like to look at the longer term picture of gold. All right. See if we can get the 1, 2, and 3 in there. Let's do this. Let's make this bigger full screen. That'll help us. We've got a lot of triggers and targets which were attained. Okay, let's fan that out. Okay, back to this wave 4 low. We're going back to the year, wait a minute, that's 2022. Yeah. Okay, so we have 1 up, 2 down, 3 up, 4 down, and there were our targets for 5. Okay, you can see there's a 2.618 multiple above. There's the actual high so far. And there was the 1.618 there. Okay, if we're correcting just this 5th wave, we're looking at targets of 3132, 3018, and 2904. Okay, we'll see how that plays out. This thing goes above 3500. There's our higher target. If it goes below 3288, we just gave you the lower targets right there. Okay, let's get out of that. Let's get here and go over here. And we're going to look at the US 10-year Treasuries. Again, we've been all over this for quite some time. Wish we had the rating services for Timer Digest, but at least we're doing the trading now. Okay, this is a daily chart of the US 10-year. Okay, you can see back here a wave 1 from the year 2020 low, another direct hit. There's wave 2, Roman numeral. Then we've got 1 with a circle of 3. We've got 2 with a circle. There should only be one of those 2s there. And then we're starting wave 3 in a circle. We have 1 in parentheses up of 3 in a circle, 2 in parentheses down of 3 in a circle, and now we're starting another 1 and 2. Okay, so direct hits all over the place on this, even in between here, but I didn't put them because it's way too crowded. Just on the major turns or targets, if you will. Direct hit here. Direct hit on 1 with parentheses, direct hit 2 with the parentheses. Down here came within 1/1000% of a direct hit for wave 2 with the parentheses. From there, let's look at this a little bit better. We've got a 1 up, A, B, C, 2 down. Again, the 618 target right here at 4.139%. It hit at 4.124. It's not as tight as some of these other ones, like 1/1000th of a percentage point. But the main idea is to get confirmation that wave 3 up is in play, we need to move above the wave 1 high of 4.590%. Okay, 2 down could still go further. The 786 is at 4.016%. If it goes below the 3.860%, then this 2 is wrong. We always know where we're wrong. We're wrong if it goes below here because it can't retrace more than 100% of this first wave up. We know it's right when it goes above the first wave up. There's our wave 3 target for the smallest degree of trend, 4.854%. There's our target for wave 3 in parentheses. There's the wave 1. There's the wave 2. There's the minimum target for wave 3, which is equality with wave 1. Okay, so that's what we're looking at with the US 10-year. Let me get out of all this, get out of these full page, and let's go look at the May monthly, because I have some things in here that I wanted to show you guys. I think just want to verify that, yeah, we're in the May monthly. We showed you guys that already, the auto trades, how to do that, the disclaimer, we always have that up at the beginning of the videos. There's that monthly big picture of the S&P 500 cash. The purple is the primary until it's taken out, and then the black is the secondary or alternate count, which shows an expanded triangle, A down, B up, C down below A. We'll get calculations of that when this becomes more serious. We'll see how that goes. That again, that monthly bar has to be taken out. That floor is in an almost ideal position, so we'll see if that all-time high gets taken out. That's a really big picture there. Okay, there's the primary count with all the verbiage in there. Okay, that wave 1 high of 48.18 has to hold. 4 can't go below there. Again, this is important. If that 4 is taken out, then this alternate count comes into play. That means this next decline is going below the wave A low, which is 34.91. That would be ultra bearish. So we'll let that play out, see how it goes, but it's on the table. Okay, and there's all that verbiage there. Okay, that's the alternate count in black, the expanding triangle, if you will. There's the verbiage on that. Fibonacci time spirals. Oh, yeah, I wanted to talk to you guys about this. We got 3 of them going on. We got one from the July 2024 high. We have another one going on from the October 17th high. That has a turn date of 6/7, and ironically or not, there are no coincidences. This one from the 12/7 high also has a 7/28. I think there was one of them at 2 6/7s. No, 2 7/28s. My apologies. There's July 28th from this Fibonacci spiral. It's been going pretty good. You see the slippage here. Not much. Okay, some of them are direct hits, and some, 1 to 2 to 3, maybe 5 days at the most. Same with that one. Same with this one here. But 7/28's coming up twice on 2 of these. Okay, scored a direct hit on our 4/30, April 30th turn date. Within two days right there. So far on the Friday, May 2nd high. We'll see if it turns out to hold or not. We'll know soon. Okay, and the June 7th is next in line, but it's also in 2 of these. Okay, so we're looking at 2 different Fibonacci time spirals that have the same exact date of July 28th. There's one before that, June 7th. We'll see what that July 28th does. That could be, it could have some fireworks, if you will, after July 4th. We'll see. Okay, here's the S&P 500 cash. Don't think I showed that before. It's got some of these turn dates. I got the turn dates in here, but this one, we've got them going back from all those other highs. But this one shows all of those. You can see we've got a 1 and a 2 and a 1 and a 2. So it's a series of 1s down and 2s up. There's the make or break for that 2, 5,700. It's sitting right there at 57.86. This 2 can't go above that 2, or this 2 at 5,700 is wrong. Okay, we know 3 of 3 is in play. 3 of this, of 3 with the parentheses, would move below the wave 1 low. There's the targets there. Another interesting, there are no coincidences. This 3 gains equality with 1 at 47.48, And this 3 in parentheses is a 1.618 multiple at 47.48. Very interesting. So we've got those dates that are have a common date, if you will, and the same with the price. So we'll see, okay? Series of 1s and 2s. Where is it wrong? We went over there. Where is it right? Here are those two price targets. 3 equals 1 at 47.48. 3 with the parentheses equals 1.618 of 1 with the parentheses at 47.48. So we'll see how that plays out. There's the 47.48 explained. Okay, and now we're looking at this here. There's our short-term, intermediate term, and long-term positions for traders. It's in addition to the auto trades, which is going very well. Here's our NASDAQ. I think we went over that. Okay, 1, 2, 3, 4, 5 in blue. All right, there's the all-time high on 1216. 1 down and a 2 up. No subdivisions on that, and you can see those targets right there. And so far, it's sitting between the 50% and the 618 right there. Okay, we'll see how that goes. All right, there's all the verbiage of that, and previous fourth wave of 1 lesser degree. Okay, there's a Dow. I think we went over that. That's just a recap. You guys can look at that for a while. There's our red targets on the downside for the third wave and for the Fibonacci retrace of the entire move up from the October 2022 low. And why do I say that? Because we're looking at this decline initially and say, okay, well, it could just correct this fifth wave and extend higher to new all-time highs. But when this low is taken out, then we know the market is correcting more than just this fifth wave. So the next thing it could correct is these 5 waves from the October 2022 low. That's where we came up with these targets some time ago. And that's where so far 2 of them have been hit, and it's between the 50% and the 618. Same with the ES, same with the S&P. NASDAQ, as always, is leading on the way up and it leads on the way down. So it loses more in a bear market, and it gains more in a bull market. But we've known that for decades and decades and decades. Okay, so there's the Dow, and that key level was broken in the Dow. And I believe it was also in the S&P or the ES. See if I can find that 8.5 high. And okay, it's in one of the charts. And it might have just been in the chart and not on here. There it is on the NASDAQ right there. Okay, that break told us we're correcting this move up from October 2022 low to the all-time high. So far it's got a 50%, so we'll see. There's some downside targets below there, but we shall see. And there's the bond market. That's nothing new. Okay, there we go. All that stuff there. All the recent triggers and targets. Not to be confused with the auto trades, which uses triggers and targets. But auto trades is where I send trades to Striker. You open an account with Striker, and they trade my trades in your account with them. Okay, let's leave you guys with this. Where'd it go? The bigger picture here. Yeah, that's a little too big. That's the monthly. Let's get through here, and we'll go with the daily right there, the cash daily. Okay. Oh, before I forget, let's see if we got that most recent. The most recent. Bear with me here. Presentation 03505. That would be the one coming up. I just changed the date on that. I think that's got some familiar things. Let me see if there's anything else I forgot to show you guys. And that is the same monthly. Bear with me, I'll get that out. 329, stock market circuit breakers. May monthly. Okay, we're going to find it this way. We're just going to not find it. How's that? We'll go over that next time. I think I've pretty much covered everything for you guys, okay? But there's a big picture. We'll leave you guys with that. And until next time, take care, everyone.